Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, July 22nd, 2025. It's 9:40 a.m. Eastern Time as I'm starting this video, and here's what we're going to do in this one. Some interesting developments that I'm noting in the semiconductors. I am going to, I'll share this right now as an unofficial trade idea. We'll call it whatever you want to call it. It is what it is. I've got price targets here I've laid out for you on SOXX, and I'll show you some of the additional levels to watch and developments to watch for those that want to be the second mouse. You know, they say the second mouse gets the cheese. This has been one of the most resilient uptrends in years. The market just, haven't had a decent down day in a while. But with that being said, there's been plenty of times in the past where I've seen a key sector like the semis break down in advance, and that's what I'm going to share here. So I know that those of you that are even listening to my voice right now, summer doldrums, the market's been in just a slow grind higher. But I wouldn't be doing this video if I didn't feel that this was an important developments here and an opportunity in the semis. I have some pretty aggressive price targets. There you can see it here. I'll post this chart. I'll try to cover it below the post. My maximum target right now, which may be extended, is a 30, almost a 40% drop down to T6. But you can see all the price targets here. This blue level should do the trick. That's why I have a 241 break below there. But here's what we're going to do. We're going to go over the components of SOXX. This is the PHLX SOXX Semiconductor Sector ETF. For those of you not familiar, the PHLX SOXX Semiconductor is the initial and the first semiconductor index. Goes back to the 90s, so you can chart it back then. There's three big ETFs that I track for the semis: SOXX, XSD, and SMH. So we'll look at SOXX since it tracks PHLX. And that's it. We have a nice clean up trend line. So let me start there. This comes off the April lows, early April lows. As you know, great time to, everyone was in panic mode. World was going to come to an end. Tariffs were hard and fast and big, 200-300%. It was a great time to cover shorts and reverse. And we've come full circle, I believe, on that rally now, especially in the semis. And mark my words, if I'm right on this, the market will follow. The semis are what I like to say, the canary in the coal mine for the tech sector. All right, without further ado, let's get in the charts. And I'm going to share some of the individual semis for both individual trade ideas. For those that prefer, let's say, maybe options on stocks or trading individual stocks, but also, as I often say, an index or a sector is simply a sum of its parts. So to make a case, especially in such a resilient, bull trend, to short a sector, especially a volatile sector like the semis, something that moves up and down more than the market, you got to have a pretty strong case to be made, and that's what I think we have here. You can see the wedge. Again, comes off, if you want to replicate it, make sure you use log scaling. Comes off the early April lows and has a couple reactions recently, quite a few, including that one there. And so we had a breakdown last about a week ago or so, and a little kickback rally. We hit that blue level. To me is important. You can see, and I could probably zone it to about right here from 241 down to about 239 or so. Lots of reaction highs here, and so I'm going to do that for you right now. I'm just going to put a second line there, and that's more of a support zone that runs down to about 237, almost 237.50, and that should do the trick, I believe, to get things going on the downside. And so there's targets. Let's go through the individual components, but like I said, a breakdown, a little kickback rally, and we're going to start with the 800-pound gorilla in the room, and that is NVIDIA. And that's why I'm doing this video today. I've covered this I cover NVIDIA all the time. It is now the king of everything in the stock market. It's not just the largest component of the S&P 500 and the NASDAQ 100, which that alone, due to the fact those are cap-weighted indexes, make it the most significant stock in that, from a mathematical perspective, just calculating the performance of the indexes. But more so, it's just the poster child, undisputed poster child of what's driven this market to the levels it's at, and that's the AI hype. Anything attaching their name to AI has been followed along for the ride. And this is it. I've got a sell signal, guys. This is I would be remiss not to point this out. And I can tell you right now, there's a gap. So again, you do you, I'll do me. But I think this is an objective short entry, especially if we have a solid close. If we close today like that, that would be bearish, because when you break down, and again, this is a very well-defined trend line. Look at all these reactions, perfect, clean reactions. And so you can see it's not mere coincidence. This is how technical analysis works. I guarantee you I'm not the only person in the world that sees this trend line. And so there are short sellers that will short. There are longs that will take out, release, cut the long, or take profits and stop out when a trend line like that's broken. Then you have a gap. Now, dip buyers are like Pavlov's dogs. When the bell rings, they salivate. They buy the dip. And so where do dip buyers buy? They often on gap, they get a gap backfill. That's about as good as it gets. So maybe a reaction there. All I can tell you is what I like to say on a breakdown, the redder the better is what I like to say. So should we go on through that gap without any buyers, it's going to show you, give it a little insight to the supply demand dynamics. Because in a bull trend, what happens to any trend, whether it's a bear trend, bear market, the lows, you run out of sellers at the end of a bear trend, and you run out of buyers at the end of a bull trend. When the last bull has bought his or her, deployed their last dollar, or bought their last share, and they have their fill in NVIDIA, metaphorically speaking, there's nobody left to buy, right? And so that's what ends. So there it is, guys. It's a sell signal right now. And that makes SOXX or any of the other ETFs, if you want to leverage up, SOXS is the 3-time or 2-time short, I think 3-time. Or you can short SOXX. My targets on the video I've shared with you long ago. I have long-term targets on the weekly chart that I still maintain. Probably the most aggressive targets from anybody out there. And T4 is it. This is just a long-term trade that is playing out. I've had these targets since last year. We hit my first target here. It was first right there. We shorted that. Then we came a little shy of the second target there. But if you recall, as I've mentioned many times, just to reiterate, posted in that comment section the morning of the very day of the lows, April 6th, covering all shorts, going to a full long position for the reasons stated at the time. Of course, it was also covered in videos and all that back then. And so that includes this one. So we truncated that drop a little before T2, had a marginal, meaning, relative. Everything in trading is relative. If you were only targeting this as your final target and you shorted here, then you might have stopped out on this. However, if you're targeting T4, which is my final target, calling for a 72% drop from that level, which now makes it even higher, that would be a drop of about 76%. So in other words, we went about 4% higher, not anywhere close to a stop. So that's it. And this is, I can sit here all day long, just tell you, and mic drop it here and say, that's it. NVIDIA breaks down, the semis are done. They are not going up without NVIDIA. So there it is, guys. I'm going to try to get through these quick, because to me, I've been waiting for a long time to see some pretty solid evidence, I've told you recently, for a sell signal. All right, so Broadcom is number 2. Oh yeah, if you're new to the site, when I go through sectors or indexes, I have the components loaded on the right there, and I sort them by market capitalization. So keep that in mind as I'm doing this video. As I start out, those are the biggest semis, and they have the biggest impact on the sector. There's Broadcom. Broadcom I threw out recently as a trade idea here. We put in a divergent high and had a sell signal there. I gave you a suggested stop, which was hit, but I've shared my thoughts and told you I still very much like this one. I'm still going to maintain these targets. I might tweak them if I add it as a new trade, because technically our stop was right there. You can see I had a little red line. I de-highlighted it because it was taken out. Now it's a new objective short entry. We have this smaller wedge right here. You guys can see it, I believe, in the video. And we have a breakdown. So that is the top 2 have now broken down. And like I said, a lot of hot air in this market. I've been talking about this for a while. I know some of you might consider it the boy who cried wolf scenario. Again, you do you, I'll do me. If you wait, a lot of times, that happened when Trump stepped up the podium. I had what I called a lights out level of support on the NQs. And when it was broken, I posted that in the after hour session, lights out, level taken out. And if you didn't get in then, you missed out on the second leg. Remember, we were already short when Trump came to the podium to announce liquidation day, liberation day. We were already halfway down through the move on the NASDAQ 100. And that just, the bottom fell out after that. And it was quick. So if you waited a few days to short, you missed out. And then you shorted right before the bottom was in, or shortly before. There was a little more downside there. All right, number 2, breakdown. And again, this would now be, if you want targets, comments have dried up because, again, I know it's summer. That's going to be your first stop right there for support 263.43. So I may tweak these targets. I just want to point out it's broken down. So, and look, guys, these are daily charts. These are divergences that have been building for months and in some cases years. So I'm not looking for 3% pullback. I'm looking for, drops measured well into the double digits in the semis. So I just wanted to kind of say that, to me, we're nowhere near what, if you're taking this as a typical swing or even trend short, meaning a trade with an expected holding period measured in weeks or months, then yeah, I wouldn't be concerned and try to game the quick bounces because, again, there's a lot of hot air in the market. And from my experience, when you get that kind of situation, the early targets tend to have little, if any, reaction because everything's been so lopsided. Bullish sentiment has swung so far. The pendulum, short interest is in many cases at multi-year lows on a lot of key stocks and sectors, at or near, or at least 52-week lows, setting the stage for a quick swoon down. So I just wanted to share my thoughts, because I try to do that in my trades, not just throw out price targets and entry points, but also how I expect the trade to play out, time-wise, whether it's going to be impulsive, a slower move, and also when we approach a target or hit a target, if I have a pretty good opinion, I'll share whether I think we're going to bounce off that target or pull back, or going right through it. Okay, let me speed it up a little bit here. TSM, Taiwan Semi. If I don't mention it, you can just, see on my charts, a lot of them are marked up and just shows you that, these divergent highs, more often than not, are followed by these are all double-digit drops, and I'll measure that last one. We were short the semis on that move down. That's a 40% drop. This is a divergent high with a sell signal today. There's your uptrend line. Again, most of these trend lines are going to come off those April lows, and they're going to look similar because birds of a feather flock together. So you're going to see a lot of similar technicals. And the fact that, as I go through this video, because here's the thing. If SOXX had broken down today, which it did, what I do is I look at the components, especially the top 5 or 10 at least, right? The largest ones. And let's just say, for example, of the top 10, 9 out of 10 haven't broken down, but have pulled right back to uptrend line support. In that case, I'm going to hold off. I'm not going to short SOXX. Why? Because the majority of those stocks are at support and the buyers are likely to step in there. So that's why I do these videos. Again, I use the analogy of a criminal defense case. Innocent until proven guilty beyond a shadow of a doubt. In other words, the prosecution needs to bring a strong case to convict a criminal defendant. And if their case is weak, they might win the case, but there's a good chance they're going to lose. So when you are shorting, which is a highly counter-trend trade now, you have to have a pretty strong case to do so. And that's why I do these videos instead of just saying, because if I just put out the SOXX trade today, and again, maybe 9 out of 10 of you will pass now anyways, but I'm showing you the reasoning behind this. So there's ASML, big old gap backfill right now. This one already broke down. And see, this is what happens. This was an earnings report right here. And this is what I see happening to the stock market soon. A crowded rush for the exit that leaves what it does, if it is that. It denies those that want to short. I'm sure there's a lot of you listen to my voice, and I know for a fact a lot out there that are flexible traders. Let me start out by saying 99% of the general public, probably a good number, don't short stocks. They don't know how to do it. They don't understand it. It's anti-American. They say the markets always goes up most of the time. I get all that stuff. And it takes a special breed because you have to always, as I always say, you have to be Johnny on the spot when you're short selling. Longs, especially in a secular primary bull market, you can be the worst market timer in the world, and buying at all the spikes right before the corrections. But if you hold long enough, you're going to get bailed out. Now, short selling I love because you make a lot more money than you do going long because stocks tend to fall a lot faster than they rise. But you can't stay too late to the party. Early April lows are good evidence of that. You look at COVID, look at any bear market bottom or big correction. All right, so that's it. So just wanted to say that the same thing happens on the entry points. Just like you can't stay too late to the party, you can't be too late to entry. And I say this because over the years I've gotten this when I'm, pick a top and look, I don't mind. I took a couple shots at once earlier this year. I think I gave you SOXX once before, short entry. That one didn't play out. But if you go back over the years, we've caught all the tops, milked out most the bulk, sometimes in some cases all of the drops, and with much fewer failed trades than profitable trades. And the thing about failed trades is, you take a shot at something if you have a case to be made. Like, let's just say, for example, in this one, you took a breakdown. Well, this was a case where it denied the shorts an objective entry because it occurred on a big gap down. Who would have wanted to chase a short a stock that on the day it reported earnings was down as much as 11% at support at that? Very few, if any. But look, it took out the 200-day exponential, the red line, and it's been moving lower. Now it's at support again, gap support. Let's not spend too much time on this one. That one is clearly broken down, and that's the point I'm trying to impress here. Every one so far that I've covered, and I've just hit the top 4, have all and the top 3 just broke down today. That's why I'm doing this video. That one already broke down, the ASML. AMD, Advanced Micro, obviously a big one. Look at the, again, beautiful trend line. Technical analysis to me is, it's just some of these charts are like art. That's a beautiful setup, negative divergence. I know nobody wants to short. People have given up, and once that breaks that level, I'm going to put one more for you just to show you there's a gap right there, and when that goes, that's even better. So what I do in these cases, I set alerts, and the more alerts that fire off, the more likely it is that the breakdowns are going to stick and not prove to be a whipsaw. But here's a case where this stock's at support. I also showed you NVIDIA and some of the others coming up on support. No, dip buyers will buy. It's just a matter of, are they going to step in at these levels and take it up to new highs, or is it just going to be a reflexive bounce? That will be determined on how these things trade today, tomorrow, and the rest of this week. Yes, we're in peak earnings season, so we're going to have a lot more semis reporting, but you can see the trend so far on the ones that reported. I'm going to get to those. Here's Texas Instruments. I believe they report tonight. Remember, I started playing the game yesterday. I play every quarter where I go in and give you my opinion on key stocks or certain stocks that I have an opinion on where they're going to go afterwards. This, to me, I'd call it down. Texas Instruments, just like I'll call it NPXI down yesterday. This one has a clear, clean, bearish rising wedge pattern. It already broke down. It's been moving lower. There's no guarantees that's the way it'll continue, but that's what the charts say. That's a bearish chart. It was a bearish technical formation, but without any sell signals till recently. It broke down pre-earnings, and you can see the last time we had a divergent high, this stock fell, before all said and done, 36%. And not to mention, I put a line there, gives us effectively a double top if this is it for the stock. All right, so that reaction high there is where it stopped. Qualcomm, one of the better looking ones. However, this was a divergent high. I didn't label it as such. That was the last. No, this was the last divergent high. There were a lot of the semis put divergent highs in earlier in the year. Remember, we were already short both the semis and the Nasdaq 100 coming early in the year for sell signals we had, and so that one dropped last time, put in divergent high about 30%, and this is also a little rising wedge and a breakdown there. So yeah, that's that. That one's broken down. And that's the common theme here. Applied materials, I'm going to tweak. I'm going to move this. Why did I do that? I had a minor trend line here, but I wanted to come in and get nice and tight. 1, 2, 3, and now 4 reactions. So here's another one at support. So again, from where we're at right now, if you want to benchmark or look at SOXX, SOXX, if we can take it down another couple percent, it's going to take a lot of these that are at support down below support. So there's still a chance. And again, they're not going to let this market roll over. It's not just going to crater right now. No, not in front of too many big earnings this week. So I don't expect a bloodbath. Earlier I was saying, hey, this can happen fast. I don't think we're going to crater this week by all means. I don't think that. I'm saying in the coming weeks, and it could be a catalyst, could be one of these big earnings reports. Now, one of those big earnings could also do this. So again, those that are at support or the ones that I started with that just broke support, the bullish case would be to see those snap back up, especially today, to have the intraday false break or in the next day or so, even if we close below. It doesn't matter whether today, tomorrow, next week, NVIDIA, Broadcom, Taiwan Semi, if they all close back above the support levels I gave you, the trend lines, then that's damn bullish because those are whipsaws. Those are false breakdowns. They're going to suck in short sellers like me and others, and then those short sellers will be forced to cover. Now, again, technicals tell me this market is on borrowed time. These divergences in the broad market, the NASDAQ 100, S&P 500, they still continue. Here's Lam Research. Again, last time we had a divergent high was right here, highlighted, marked then was your breakdown right there. This stock off that divergent high fell 50%. So this is why I do these videos. The profit potential in the semis, both on the long side and short side, is huge. That's just the trends. There's T1 right there, 91.87, T2, my second target, T3, T4 right there. MU, Micron, breakdown, uptrend line. KLAC, this is another big chip equipment maker like AMAT. AMAT, KLAC, they make the equipment that the chip makers use to make chips. So when they break down too, that's obviously a pretty bad sign for the sector. Divergent high, nice price support. Previous reaction high. So what you have in this one is a breakout to new multi-year, possibly all-time highs. Okay, bullish, right? Yes, on face value, that is bullish. It is bullish right now. It hasn't failed. But a failure, which I would bank on based on the technical posture, the negative divergences, just like we had a divergent high right here. There's your breakdown. There's the drop. Divergent high there. There's your breakdown. There's the drop. Simple stuff, really. A divergent low. That's when we were covering shorts, going long. That's the catalyst for the rally. So now what happens if and when it breaks below 905 or so, this breakout to new all-time highs has failed. So all the JCL longs, what I call them, Johnny come lately longs, they didn't want to buy it here when we were covering shorts and buying. They wanted to buy here, or the breakout. So what happens is their stops should be placed not too far below in case that breakout fails. If it does, and everybody's different. Some have tight stops, some have more liberal stops. So the way it works is the lower you go, the more stops you hit, the selling begins to accelerate. And again, I may be getting ahead of myself, but that's what I try to do is get you these setups in advance so it's not too late. It's like reading, you read the Wall Street Journal or Barron's, you're reading what happened in the markets today or yesterday or over the last quarter or the last year. That's hindsight information. That's not what we're doing here. I'm trying to give you setups, levels to watch. Again, so as I've gone through this, we see some semis breaking down today, some of the most important ones. The day is very, very young. I started this video right after the market opened. So we could easily rally back up, close back on, and then guess what? Those breakdowns like NVIDIA, Broadcom, they weren't really breakdowns because what I always say is if you're trading on the daily time frame, the most important thing is how you close the daily candle. That daily candle could print back on or above the trend line. So that's what I like to say. The redder the better if we close down where we're at now, especially if we close down below that gap. Probably won't happen today. They'll probably come in and buy this gap up. By the time you get this video comes out to you, they're going to step in like Pavlov's dogs do, and they're going to buy the gap. That's what traders do. That's what I do. So there it is right there. There's your gap. See, perfect. It's you could almost bet the farm on it that you're going to get a little bounce. Now, how far? Again, that's why I'm doing this video. This will be a tell, if you will. If they do this, there's a lot of buyers still wanting in this market, still wanting to buy NVIDIA. If they do this and the bounce is relatively muted, there's your first resistance right there, about the top of the gap, give or take, and they fade it down. And again, we could go here for a week. NVIDIA is not going to report for about another month. So you got plenty of time before NVIDIA. They're the outlier in the big tech world. Everything else, all the big top 5 components, they all report in the next week or two. So that's it. Watch for NVIDIA now to take out today's lows, which would be where everyone stepped in and bought the gap, right? And so again, this video, I'll get it out to you. There's no rush until these guys break, but this is a sell signal. So the way I would look at this, start a short position today for those that are comfortable with it. So aggressive, certainly counter trend, adding if and when all the remainder of these stocks, either the ones that have broken down today, take out the next support levels like NVIDIA right there, and the other ones that I've showed you that haven't yet broken down, some of these that have just fallen to trend line support, like Applied Materials, for example, when they break down, it's going to be additional check marks. Lam Research, LRCX, clear breakdown, clear, and again, guys, I look at these charts, they're not all labeled. I can see it. If I don't, mention it there, you can just see my lines. You can see the divergence lines. You can see this was a divergent low right here. See my positive divergence there, divergent low, a breakout back test, nice rally off that back test. This thing rallied about 30%. Off that divergent high, it dropped to before the initial bounce, about 39%. And this one broke down. This is Lam Research, big tech, big semi. And that was a nice, clean breakdown candle. We actually had a breakdown there, back tested it the next day, impulsive rejection, which I like to see after a back test. And now that's still a recent low. So this one's been going sideways. You need to take out that recent low to open the door to the next targets. All right, the rest I'll just rifle through. Micron, breakdown of the primary uptrend line right there. KLAC, breakdown right there. Was I already on KLC? Yeah, I got away from this. Something happened. I clicked and it reloaded a new list. That's what was going on here. So KLAC, again, needs to take that recent low out, that line there. ADI, analog devices. Look at this. Divergent high, drop. Marginal new, just like the stock market, in my opinion. Marginal new and still divergent high. The divergence got even bigger. That's exactly what I expect QQQ to do soon. Make a breakout to new highs. Sucks in a lot of the last of the retail money, retail crowd. Then the big drop came. And if you bought that breakout to new highs on this stock, if you were the unlucky sucker to do that, you were followed by a 36% swift drop. Again, that's the nature of these things, and that's why I do these videos. That's why I like to get this stuff out, because you can't wait too long. If you're a bull in a bull trend, again, you could be the worst market timer. You could buy all these rallies. Over time you get bailed out. But if you're a short seller, you got to have that. Your timing has to be much more precise, but it pays off. To make 30-something% in what is that, a month? Where usually takes months or even sometimes years to make that in a lot of stocks like this. And that's it. So 1, 2, look, previous high, breakdown, at testing right now, my first support level, 236. You can see a reaction high here. It's a line I've had here since 2024, all the way back in November, because it was a very key level right here. It was resistance after we put in that divergent high. ADI couldn't get through there, fell, rallied off that divergent low, tried to take it out, but failed that breakout right there, and then lights out. This is what happens when a breakout fails. And so that's a very important support level. So again, as I'm doing this video, right now, you can be long at this very moment. By the time the video comes out, too, who knows? It depends how much of the bounce. They're going to come in and buy it today. They're already buying a lot of these at support right now. You can see we briefly intraday cut below there if you look at a 1-minute chart, and they're buying the semis. But again, so this rally is on borrowed time, and more importantly, guys, fresh off a breakdown, I don't care to get cute and come in and try to game these bounces early on. I'd rather wait to see a kickback to resistance and short or add to shorts in this sector, and or also wait for some breaks. So right now it's pretty much a break of today's lows should open the door to the next leg down in SOXX, regardless of what time you get this video. Intel I've covered. That's one of the best looking ones out there. I've covered this quite a bit recently. Just a series of divergent lows off long-term support. I've highlighted this one many times over the last year. As long as each time we pull back to the support level, that's when I don't care to short. Now again, if the sector takes it on the chin, it's going to be certainly a headwind for Intel, so there's better fish to fry. However, like I said, one of the better looking charts, it just broke out above this primary downtrend line. So there's one that if you're going to pick individual stocks, you might not want to bank on that one going down too much. I think you have a lot more meat on the bone on shorting NVIDIA, Broadcom, Taiwan Semi, those that are coming off fresh highs. Marvel, just look at that beautiful clean uptrend line back then, and again, this would have been covered in videos at the time. What I'm saying, thing that happened, breakdown, back test, and a powerful drop, and there's your uptrend line that is walking up now. Break of that, it's going to resume the downtrend. NXPI, that one I covered because they reported last night. And again, it's only one day after, but it's down 3%. It was down more than that in the after-hour session. And what you want to see this one, and it's a break. It was already a breakdown to backtest, as I covered yesterday. Breakdown, backtest. There's the impulsive rejection I like to see following a backtest. This is the lights out level, about 210. Why? Because it will have, that's price support, number one. It's also the intersecting 200-day simple and exponential moving averages. When it's in a bear trend, it tried here. It was above them for a day or two. That was a whipsaw, false breakout or a rejection, whatever you want to call it. And here's what happens when traders saw that it failed to regain the 200s. You had that final leg down there. So that would be a bearish technical event to fall back below the 200s. And again, I'm getting down to the lower, smaller names. I have some of these I don't even have marked up. All I'm doing is just like the stock market, extending the divergences that have been building. MCHP, MPWR. I haven't marked it up in a while. I'll just mark up. See, we're just finally getting divergent highs in a lot of these semis. We didn't have that before, as you can see the charts I've gone over. So it is time, and I started the video with price targets for you. And again, is it an all-in moment? In my opinion, no. If you're super aggressive, maybe. If you're banking on some bad earnings coming out this week, remember we still have this week and next the rest of the big fangs report. Big techs all over the place in the next week or two reporting, and a lot of semis. But the charts are the charts. I go off the charts, guys. If you believe, fundamentally, or somebody on TV is telling you the semis are going to go up for this reason or that, and tariffs are going to help. Again, that's fundamental analysis. That's what Warren Buffett's famous for. So if you want to buy and hold semis for long term, and you listen to somebody's fundamental analysis, that's great. Go ahead. What I'm giving you here is technical analysis. Is much more precise. Especially timing wise and and directional, in my opinion. All right, so there it is. Breakdown, backtest, STM needs a impulsive rejection, but that's it. It's already a breakdown to backtest. That's on a sell signal. ON. All right, guys, we have a few more. I'm just showing you levels. There's UMC, nice support. You can see this is good support here. Lost it right there. Big red candle. Tried to get back, rejected. Tried to get back again, even intraday, rejected. Breakout, successful backtest, and it's been backtesting that level along with that red line, the 200-day exponential moving average. So below that should be done. Stick a fork in that one. TER, Teradyne, trend line right there. Set an alert. ENTG, again, we get down to the realm of, this is a $13.7 billion company. So not a tiny company, but it's just not going to move the needle. Nothing moves the needle like NVIDIA will in the sector, but there's a recent breakout. But look at that. So we all see what we want to see. I like to see everything. I like to see what bulls see. I try to look at charts as agnostic as possible, the bullish, the bearish. At the end of the day, I give you my opinion. There's always something. I've always said this. You give me just about any chart. I can sit there and you say, Randy, make a bullish case or a bearish case for this stock. I can do that. But I don't like wishy-washy analysis. I'm going to give you my thoughts. Quite often, I'll tell you, I don't have a good read on a chart. Somebody asks my opinion. I don't know. Well, here's a chart. Here's some support and resistance levels, but I have no idea which way this one goes. On this one, I can tell you, so the bulls see a breakout of that nice, clean uptrend line, or downtrend line. And it's still above this uptrend line, which is okay. However, if you turn off all the levels there, look at that. 200-day moving averages, these beautiful little moving averages, the 200 days, the red and blue line, exponential and simple. You take them out. When you're in a bull market, this stock does very well to them. Some stocks behave, that was a word I like to use, behave to the 200s better than others. This one does a great job. When you're above the 200s, you're long and strong. When you take out the 200s and you're below them, you're bearish. And you short rallies back to them. When you take them out, it's bullish. And that might not look like much, but you took it out. You had a nice rally of about 30% there. And that was bullish. You took them back. You back tested them there. A brief little whipsaw down below, but you kept it going. When it regained, the sellers came back in. The buyers. But then what happened right here? Boom. We took it out. And here's the thing about technical analysis, guys. If you want to see if a level is really significant, if this is just random, the fact once we took it out, look at how the bottom fell out in that stock. Look at the impulsive red candles. So you took them out, you gapped down below, and in 2 days the stock dropped 22%. So that tells you that a lot of both man and machine, humans and algos, are trading this stock off the 200-day moving averages. Right? You can't dispute that when you look at the chart. In my opinion, it's indisputable. Now, sometimes it's the simple or the exponential, the red line, and that's what it's been there. They shorted every rally, they sold every rally into the 200 because it's in a bear trend. It's below it. This is the first back test of both of them right there. So I can't guarantee a rejection here, but I can tell you the probability, the odds say the stock is in a downtrend. It's the first rally. And by the way, it's rallied from the lows 50-something% just to test the 200s. Yeah, and you have some price support there as well. So turn back on the lines, price support. All right, so that's it. I just see a lot in these charts. That's why I do this video. I can't one or two static charts and paragraph or two wouldn't do justice. That one, nice coming off a big divergent low. I wouldn't short this one. This one looks better than most. But it's also, again, it's perspective. It's in a bear market. The stock peaked back in 2021. And if you're a semi and you're not at or near all-time or multi-year or all-time highs right now, what's wrong with your business model? So that's just a bear market rally. And it right back, look at that, guys. Right back into the 200s. Perfect. Back just like right there. Right there, it's been below the 200s, rejected. Now, if this one and all the others I cover that are below or testing the 200s start taking out the 200s, especially if you start taking out the divergences, again, this one just had, put in a divergent high, something else is going on. And we are looking at maybe like a 1999 type blow off top in the markets and tech and semis and all things AI related. But as of now, I don't think that's going to be the case. All right, there's your divergent high on ASX. There's only a few more. Why stop now? I'll cover every component in here if I just do 6 more. So that's it. Divergent high at resistance. I don't have a great trend line. I don't want to force that one. I'm going to take that away. If you are interested in trading any of these individually, ask me and I'll be glad to mark up. A lot of these lines I've had here for years. This one was created back in 2018. All right. 2018, I created that trend line. I haven't tweaked it since then. You can see it's just done a great job of, and this is 2022 right here. So I created that trend line in 2018 as a support resistance level, or that horizontal line. It ended that bear run there, resulted in a double-digit rally. came in, hit it again there, perfectly bounced, then gap below it right there, and then tried to take it back but failed, had that other leg down. And so I'm just trying to show you that a lot of these levels are still relevant, but from time to time I will drop off or move or adjust. Like for example, this one here, that one line I would move now. It's an old trend line or old horizontal price support resistance level. That's the level it should be at right now because that's that previous reaction high. LSCC, I don't have much of an opinion on this one. Rambus, RMBS, uptrend line right there. Divergence. That's it. Wait for the trend line break. MKSI. Again, this is simple. Really just draw trend lines, most of these off the April lows. And again, the more I just went through, I have two more. Every single component in SOXX, so many are either just breaking, especially more importantly the big ones that I started the video, and then other. This is the second lowest, smallest one, 2.3 billion. Wolf is the smallest in SOXX, and it's right on the trend line now. And if it breaks that trend line, guess what? It's going to fail this breakout above the 200 days, just like it failed it right there. And that's when it first lost them. So some of these stocks, this is the story of the semis, just like the stock market, you know. You back out, the big winners, the ones that move the needle the most because they have the largest cap weighting, are given a false guise of strength. There's a lot of stocks still in bear markets. And this is a stock clearly in a bear market, peaked in 2023. From the high, it dropped as much as 80%, and it's still today down 63%. It's threatening to break back down below the 200 days. It hasn't done it yet. So again, I wouldn't, if you put a gun to my head, I'd have to go long this stock right now. It's at support, dual support, the 200 days and the uptrend line. However, if it breaks that, then it's just lost dual support levels and it's most likely going to resume its downtrend. And again, so fundamentally, it's not a hot company. If, you know, all these other semis are ripping, I guess these are the ones that, I don't know what the story is on this one. It just probably doesn't have a hand in AI. And so the market's not buying it. All right, guys, let me wrap up here. That's it. I'll get the video out to you. You know the levels to watch. Feel free to bump me for any updates. And you have, again, I started with the targets on SOXX, my current targets right there. And those are, I still have longer term targets, I believe. Yeah. This is where we go longer term. This is SOXX going back to 2008. This is what we call a secular bull market uptrend line. Comes off the '08 lows right there. Beautiful, beautiful trend line. And that's one of many reasons, you know, early April, we were covering shorts and going long because a lot of things were hitting support, such as the semis right here. And that's, again, look, maybe you don't share my longer term bearish views, but you're looking for, you know, correction, better time to get in the semis. Another pullback to that trend line. You can see this has just been a phenomenal place to buy. But you can also see my red markings here. These are all the drops off divergent highs right here. That one was a 45% drop off that divergent high. If that trend line goes, if and when it goes, no bull market lasts forever. When that trend line goes, the secular bull market in semis is most likely over. That is a super well-defined, very significant trend line. And then you could see we could be in a new secular bear market in semis, and most likely we would mean the stock market as well. Okay, I'm going to cap it here. Get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.